Hello everybody, it's March 13th, 2023. We have a lot to talk about. Let's go over what I said on Friday. A lot has happened since then. So we did see Bitcoin break down a little bit, and because of that, I was eliminating one of the scenarios here. I said the orange scenario is probably out now. Which reduced us just to the blue bullish scenario and the alternate really bad bear scenario. That, unfortunately, that has gotten a little bit more complex now with the movements we've seen. But basically, I did say during the video that we could see, even though I was expecting a new low, I was expecting this to go down to about 17.5 to 18.5. I did say during the video that if we break out of the downward channel line, that we could see a bullish surprise, and that is exactly what we've seen. We saw the channel break and a bullish surprise. We're at 24K now. So always got to stay on your toes with these, and I've been pretty much flat this entire time, so it doesn't really matter to me. I'm just kind of trying to figure out when the best entry is for an actual trade. And when you don't have a clear setup, it's best to just kind of wait. All right. We also had USDC going on, right? And as of Friday evening, USDC had traded as low as 93 cents on Binance. But I said that the panic is probably unwarranted. Because realistically, only 2.5% of Circle's reserves are in that bank, SVB, that collapsed. And so it should be quite capable of handling the loss and maintaining the one-to-one backing. I did personally move my money out at around 99.5 cents, just because the narratives are really powerful. And so I'm going to show you a chart about that. So even though, I did think Circle was going to be fine, which at this point it is. I did move my money out of USDC. And let me just show you real quick here. We're going to go to this chart on Binance. So you can see we are back up now at 99.88 cents on USDC, so essentially $1 again. It's reclaimed its peg. But check this out. After I did that video on Saturday, number one, it went down to, on pretty much all exchanges, to about 85 cents. And then on Binance, look at this crap. There's such a thin order book on Binance that somebody fat-fingered and panic sold their USDC and didn't get filled till 33 cents. So someone got 33 cents on the dollar for the USDC on Binance. Bad news for that person, obviously. But that's the kind of thing that I said. When I said, this is probably going to get worse before it gets better, that is exactly what I was worried about. I personally didn't feel like holding on through all of that. So when I got out, it was right here. I avoided having to deal with even worrying about it. That entire situation, I didn't have to even worry about because I got out at 99.5, right? So, that's just kind of illustrating my point that it was going to get worse before it got better, but Circle is fine, right? We are back at peg now, all good. All right, let's talk about Bitcoin. Obviously, the Circle kerfuffle certainly made Bitcoin move. And then the Fed bailing out depositors today made it move even more. So you can see here is my original thought on this was that we were heading down in a 5-wave move to complete this C wave in a diagonal. And the count should have been This is 3. This is 4. Should have ended right there, and we should have had one more move down to 5. Ideally to make like a pretty pattern and make me really confident that the bottom would then be in. However, I did say, again, if we break that downtrend line, we're going to see a bullish surprise, and you can see what happened since that downtrend broke. We are back near the highs once again. All right, so let's take a look now at possibilities. We're going to get rid of this 5 wave. We're going to get rid of this diagonal just to kind of clear things up a little bit. All right, first off, this is still very possible as our move here, right? 5 wave move up in blue, A, B, C over in a second wave. That is still a possibility. I can't say that we have too much clarity low time frame right now. I'll take a look at that with you. But it is a possibility that this is still playing out as I have it drawn. So let's take a look. Let's switch this to a 4-hour real quick so I can fit more on the screen here. All right, let's put on our fib extension for this. We would start here at the bottom. We would go to that 5 right there. That's our first wave. This would be our second wave, and let's just see where we are. Okay. So what we should see, if this is going to continue bullishly, we should see a move to about the 618. So 25,875. And you can see, actually, I haven't gone over this yet, but you can see that's pretty much where my target is. From there, we would want to see a nice 3-wave pullback to the 382, and this is really the buying opportunity right there. Okay, if we didn't get buys in this area, that would be the next really good buying opportunity right around 23K. So I think, that's really what I'm going to be focusing on. Now, that being said, if we just continue upwards, we don't do that structure, we don't see it move to the 618 and then the 382, we are in danger of all of this simply being A, B, C. We could see a direct move to 30K or even 34K. It might directly move there, right? If it does directly move without doing this pullback first, then we have an ABC most likely, and we are still in danger of going down. So that is something we're going to have to watch really closely going forward, that this does not turn into an ABC. So I'm going to put that in here as our red alternate possibility here. Okay, that's the danger. That's the immediate bear danger that I see on here. But bulls might prove that wrong if they can get us right around that 26K area and then pull back. They may end up proving that wrong. Now we'll still have to see it move from there. So let me put on the moves that I want to see happen for this to continue proving itself. We should see, this is going to be sort of the macro movements here. Instead of an A, that should be a 1. Here's our 2. We should see, again, this micro 1, 2, and then eventually this will lead us to about here, 40,500 for wave 3. Wave 4 will give us a pullback to about 30K, and wave 5 up to 48. Now, any of that could extend along the way. We might see that third extend or whatever, but the main thing is still we need to see this micro action play out to tell us that that is what's happening. So you can see this is a really good risk reward if we do get a pullback from about 26 down to 23. That's a huge reward right there versus the risk, which is basically going to be putting a stop, under 20K. So we can long 23, stop under 20, and we're targeting 40. I mean, that's a great skew right there. So that's what I'm looking for. But again, we do need to see some pullbacks happen in order for that to become, continue being the primary expectation. Otherwise, like I said, if we continue upwards, ABC, and then we can just see it die. And we've seen Bitcoin do that quite a few times, actually, where we just see an extended move with no pullbacks at all, and then death. So it's important we build that foundation. All right. I'm going to change this to blue. That continues to play out the blue scenario. Okay. I'm going to change these yellow numbers in here to blue as well. And let me explain the micro here for you. Again, can't say it's incredibly clear, the action right now on Bitcoin. I actually have a bit of a better count on Ether, but my focus is on Bitcoin in this video. So I'm looking for, realistically, this to be 1, 2, this to be our third wave. We should see a pullback here for wave 4, micro wave 4 into this area before a move up to wave 5 right around that 26K area. And then again, the larger pullback from there should bring us right back down to around this 23 area. So we are in the best case scenario where the bulls are actually building the structure they need. We are going to be chopping around between 23 and 26 for a bit before we can really start taking off in this scenario. So let's change this to blue as part of that blue, more immediately bullish scenario. And you can see this is 5 waves that I have here within that little micro 3. So again, just kind of looking for this 4th wave pullback into that area there, and then a wave 5 up to 26. That makes the micro and the macro line up really nicely. If we can see this, it makes it line up really nicely and will give me a lot of confidence. If we see that green box not hold, we might be in trouble. Let me see. If it drops under 22K, so we're going to put a little warning line here at about 22K. That's the 0.5 fib. It really shouldn't go below that if it's going to stay impulsive looking, which I would prefer. So we need to keep it above 22K. Below 22K, I mean, it's still possible that maybe all of this is wave 1. Like this could be 1, 2, 3, 4, 5. It's possible, but hitting the 0.5 on the macro doesn't really make me happy. If it breaks 22 before hitting that. So I want to see it hit this area, ideally. So holding above 22K, we should see, realistically, this is 25.8 to 26.6 is the actual range, but the macro is 25.875, like I said. All right, what else? Let's zoom back out for a moment. I want to talk about the orange scenario real quick that I deleted. That involved this just being 3 waves up, meaning 1, 2, all of this being 3. I was looking for a 4th wave pullback, which this looked really beautiful for. But unfortunately it came down and it broke the 0.5. And remember, the wave 4 shouldn't break the 0.5. Now, it didn't sustain below it. So, I mean, I guess, unfortunately, I need to kind of just keep that in the back of my mind anyway, as another alternate scenario that maybe that's still playing out. Really shouldn't be playing out as an impulse because it broke that 0.5, like I said, but I'm going to put it on here just in case. And this would go to about 26.6 to 28.1 was the original target for that. I'm going to put it back on as the orange scenario, I think. All right, let me put an orange box on. And this will really only come into play if we see this move that's happening now. If we see it come up into this orange box and then do a deeper three-wave pullback than we expect, like deeper than 23K, you know, getting back down around this 20K area, and then it rallies again, that at that point, that would then have to become the main scenario. So again, I don't really like it. It broke the 0.5 fib, but I'm going to put it back on the chart just in case it does intend on doing that, so that we have some sort of basis for what might be happening. Because then that would be, instead of this being 1, that would make this 1. And instead of this being 2, we would have whatever that pullback is would be 2. But we'll deal with that if, and hopefully not when, but if it comes, we'll deal with that at that time. All right, real quick on indicators. Obviously, 1 hour and 4 hour are very, very overbought right now. That lends some credence to the possibility of coming back for this fourth wave pullback right now. It looks like those indicators really should reset at some point in the near future. And then I do need to mention over here on the daily, I said to members last night, if we can close the day today above this orange line, then it is much more probable at that point that the bottom is in fact in. And we did do that today. We broke back above it. So I think what's likely to happen, again, if this continues bullishly, we're going to see a little bit of a pullback and then a push up. That should coincide with kind of a little pullback and then a push up on the RSI. And then we should have kind of a larger drawn out pullback, which would hopefully bring this down to retest. And if we see that retest, the RSI right about the same time or around that 382, that's an even better indication that it is time to buy. So that's another thing I'm going to be looking at, keeping an eye on, because that RSI breakout really does often give us some nice trading signals. Doesn't mean you're going to want to buy in right now, but on the pullback and retest of it, it can be pretty profitable. All right, I think that's all I have to say on Bitcoin for now. So we'll see what the rest of the week brings. Even though, you know, this is looking very bullish, please keep in mind that anything can happen. We have Jay Powell talking in 9 days. They're going to make a decision on how much, you know, they're going to raise interest rates. If they're going to raise interest rates, there's a lot up in the air right now as far as what they're going to do, since, you know, their interest rate raises have been causing bank failures now. Are they going to continue in that vein? And interesting thing I saw is that their solution to these bank failures is basically to allow the banks to pledge their treasuries at par value, meaning even if they've lost value, the Fed will give them a loan based on the original value of the treasury. And that's how they're going to prevent further bank runs. Now, what that means is they've given themselves cover to continue raising rates at the same pace they've been going. So, you know, everybody was speculating that, oh, the banks failed, so Jay Powell's going to have to slow down the rate hikes. That's why we've seen this rally. However, because of that new facility they've opened that allows banks to pledge their treasuries at par value, it means there's not going to be any more bank failures because of bank runs. It doesn't matter that the treasuries have gone down in value because of the Fed raising rates. Therefore, the Fed can continue raising rates. So they might be trying to thread this needle and actually raise a 0.5, which the market is not expecting right now. And I'm a little bit afraid what happens. Best case scenario, even if the Fed raises rates 0.5, we would just sort of see that microsecond wave pullback that I'm talking about. But worst case scenario, we could see this still fail because we still, at this point, we still don't have an incredibly clear structure. And we do not have, complete proof of a bottom being in. So anyway, all of that to say, there's a lot going on right now over the next week to 10 days. A lot of volatility is to be expected. So, not trading this area is a very, very valid and probably smart thing to do. I continue to be in cash. If you're in cash, it means you're not losing money, and not losing is as good as winning sometimes. So, all right, that's enough of me jabbering away. I will talk to you all on Friday. We'll see where we are at that point. Good night.